Hey there, welcome to the My Risk Advisor podcast, and today with me I've got Matt Page. Matt is from Sprout Financial Services, all the way from Auckland over here. Thanks for joining me, Matt.
Thanks, mate. Thanks for having me.
So we met in MDRT in LA. So you did a great connection zone session, which I wasn't at, but I heard it was great. And so I thought you were coming to Melbourne, and we thought we'd catch up and chat about business and share our trade secrets. And then while you're here, I thought I'd record an interview and ask all about your journey. So talk to me about your journey and advice.
Cool. So I've been an advisor for 19 years now. I know I look really young.
Wow, yeah, you started when you were 12.
Yeah, must have.
That's great, yeah.
I started at 25, so just turned 45, so 20 years next year. But kind of been around insurance and the financial services industry my whole life. Like my dad was in, he actually worked here in Melbourne for Tower back in the day and then in Sydney. And then he set up a company and I sort of went in there and he retired and I became an advisor and we built a company called Financial Design Group in Auckland. And we sold that and set up Sprout about 5 years ago. So always usually around insurance, life insurance.
And for those younger advisors listening to this, Tower turned into Tau. And so that happened when I joined the industry. I remember seeing old Tower policies. I'm like, well, who's Tower? What are we talking about? Anyway, it's Tau. So you grew up a little bit in Melbourne. And then moved to New Zealand and made your life there. So talk to me about that journey of selling the business and then starting another one. Like, did you decide, you finally had your freedom to get out of advice and then you came back in? Is that?
Yeah, I know, it dragged me back.
Yeah.
No, we had a business. There was four of us that owned it, and one of the partners wanted to retire. And it was all around the time when the new licensing and compliance was coming into New Zealand, and we weren't quite sure how it was going to look. So we decided to sell the business to another company who was going to get their license, and we were going to work alongside them. After about 6 months of working there, they gave us all jobs and stuff, which was cool. But after 6 months, I realised I'm probably not to be employed. And decided that I had this idea in my head about how I wanted the advice business to look. So I asked if I could leave, and they probably were happy to say yes.
They said yes, please get out.
They were probably going to ask me. But
you got
I
in
set
there
up
first.
Sprout. So I set up Sprout and sort of spent a year or two just sort of figuring it out and working on process and systems. And then I've had a business partner join me, Rick, who's also an MDRT member from New Zealand. He joined me in September in 25. And so, just rebuilding and growing a business again.
Yeah, cool. And I guess the reason why I wanted to interview you is to get a bit of understanding about your journey and like hearing other advisors' journey, but also learn a little bit about in the New Zealand market, because any Australian who knows anything about New Zealand, all they hear about is your commission rate. But I want to talk a little bit more detail about it because I was in a conversation at MDRT with someone from Canada and someone from New Zealand and myself, and we were just talking about all the pros and cons of our systems. And I think in Australia we have the biggest cons. Our regulation is probably more difficult than anywhere, but we also have some of the biggest pluses in terms of the superannuation system can cover the cost. And I remember talking to someone there and going, "Well, KiwiSaver, can't that fund any of the premiums?" And that's not how it works.
No, all the premiums are either company funded or self-funded. So you're paying, user pays.
Yeah. And so, all right, before we talk about New Zealand products and getting a bit of understanding about that, we met at MDRT and you said you've been an MDRT member for a long time. What got you into MDRT?
It was industry stuff in New Zealand. They used to have some speakers come out and they were talking about MDRT, and they'd bring out these people who'd been, who were advisors from maybe America or Australia or England, and they were just really cool people and seemed very aspirational and good ideas that you could implement in your business. And so we started trying to find out what this MDRT thing was, because we just thought we didn't know what it was. And then so we got involved and realised that we'd qualified, so booked a ticket to Toronto in 2014 and flew over the other side of the world and went to this conference and was just like, holy, 8,000 people and just amazing content and great speakers, and just found it was so inspirational, to be able to go away for a week and come back with some really good ideas that you could implement straight away that worked. So the first year was kind of about seeing what it was all about and sort of being quite overwhelmed by it.
The first timer.
Yeah, I know.
Did they do that?
They had a huge thing when I went, and it was like we went through this tunnel, and it felt like there was 1,000 people like cheering for you. And I was just like, oh, New Zealanders don't like that.
Neither do Aussies.
Yeah, we're not rah-rah.
Yeah.
And I was like, I remember going into this going, I'm not going through that yet. And then halfway through, it was one of the best things I've ever done in my life.
High-fiving people.
I was like, I'm the high-five guy. So it was really fun. And I just you had to embrace it, right? And just go, well, this is this culture, you're in it. And I just learned heaps. But I ended up meeting some really cool people too. So luckily we've got like the Anzac group. So we sort of met some of the Aussie guys at a function they had, and they were really cool. And then sort of met a couple of Americans and Canadian people, and then it was like, oh, next year we sort of, chatting on text or whatever, and coming again next year. It's like, yeah, coming again next year. So you end up meeting up with them every year, and yeah, the content's really good with the main platform and the focus sessions, but it's also the catch-ups you have with these people, when we are sitting around having lunch or something, and there's sounds like a bad joke, but a Kiwi, an Aussie and a Canadian in a room, you start having some really cool conversations, and the amount of stuff we've been able to learn from other members around the world that we've been able to implement in various different businesses has been amazing, because you can do a lot of things where you skip the things that you don't want to do, the mistakes. I can ask you, what did you make a mistake on when you were doing this, and you can tell me, and it's like, cool, well, when we're trying to do that, we won't do that. We'll try not to do it. Yeah. So it's a lot of that stuff, and just that connection of people around the world, and obviously understanding that we were going into regulation or a more regulated market in New Zealand, talking to the guys from Australia and England where they were super regulated, was able to talk to other people in our industry in New Zealand who could talk to government and make it so it wasn't as badly regulated and it wasn't as strict. So kind of lucky with that global network, I think.
One thing I always talk about in Australian financial planning is everyone is so welcoming, so willing to share and give information. Like, there's only ever been one individual in my whole career, and I'm a big asker, and I imagine you're the same. Ask for help.
That's why I'm here.
Yeah, exactly. So, and there's only ever been one person who's ever said, oh, no, I don't want to share that because that's my trade secrets or whatever. I'm like, okay, well, I've got to respect your decision, but I've always been willing to ask anyone anything and share anything with anyone. So, and the MDRT is that on a bigger scale.
Yeah,
it's like no one is willing to, squirrel away their secrets, because it's like, well, if I've learned this mistake, if I share it, you may not make that mistake, or if I've done this well for me, whether it works for you or not, you take it how you will. It's definitely been something that has been great about getting involved with MDRT, and you're doing something in Sydney, the global session.
Yeah, I'm on the PGA, which is the volunteers.
What does that stand for?
Program General Arrangements.
Okay.
Yeah. When I first heard about it, when they asked me first time, I was like, I'm not very good at golf.
Yeah, I'm not a golfer.
You wouldn't want me there.
Yeah, I shouldn't be on the PGA Tour. But appreciate the invite.
Yeah. Thanks, guys. I was wearing a polo shirt. Maybe they thought I was part of it. But no, it's the volunteers, because it's a member-led organisation, and there's so many people, 5,000 or 6,000 people walking around. They might get lost in these huge convention centres. So they have PGA volunteers who are, helping direct traffic and.
So you are.
So I'm a chair for the traffic of PGA. So
which means that you are the one encouraging people to go rah rah.
Yeah.
Yeah. You're the rah rah leader now.
I'm now a leader of rah rah.
When you first didn't want to, or
I couldn't imagine that in 2014.
Yeah.
Like, I would have been like, no way.
Yeah.
But it's good fun, because you actually get to meet so many different people from, I think traditionally I've just sort of speak to the Aussies and the Kiwis and the Canadians and the Americans and the British and Irish, but then you're volunteering with someone who's maybe from the Philippines or Malaysia or I've got a really good friend from Brunei now. I think there's only about 3 MDRT members from Brunei, and one of them's become a really good friend.
Yeah,
and it's
cool.
Like, we catch up and we actually work together on these committees, and you just get to meet so many more different people from around the world, and we've all got similar issues or similar problems, or we've got similar wants and needs, and how we can serve our clients better, and it's just cool to see what they do as well.
And that is one thing about building bigger communities, is you realise, it's less insular. It's not just our problems, it's everyone's problems, or it's not just our success, it's everyone's success. So last question about MDRT. How much does it annoy you when people talk about it being the Aussie night, when Kiwis actually make up a bigger representation of the Anzacs? These bloody arrogant Aussies come and saying, it's the Aussie night.
No comment. I don't want to piss off your audience.
No. I mean,
no,
I'll piss them off more than you will, so don't stress.
I think probably traditionally there was always a lot more Australians. Like
Okay.
I remember when I started, there might have been like 100 Aussies and 20 Kiwis. But now it's the Australian. It's probably not so bad. But I think there's going to be like 65 New Zealanders in Sydney, and I can't remember, maybe 30 or 40 Australians. So
We've got to step up.
we've got a few more numbers. So
Yeah.
maybe, I don't know how you make it the Kiwi night, but I don't know if that'll go down well.
Yeah, no,
That'd
it
be
should
good
be. It should be the Kiwi night, and then because the Kiwis representing more people, you're representing funding. Like you guys, not throwing us Aussies under the bus, but we need to step up and actually represent a bit better.
Oh, that's easy. Just show up.
Yeah, just show it. Turn up.
If you're not going to come to the meeting, come to the meeting.
Yeah.
If you're from Australia.
Yeah, cool. All right, so talk to me about. I'm interested in the New Zealand market. One, tidbit. I did consider going Sky New Zealand, not because of the commission rate. It was tempting. Don't get me wrong, but I was looking at we do have some Aussie advisors living in New Zealand. We had to go and get regulatory advice to see if that was okay, and it was eye-opening being able to send an email to your regulator and getting a response that was helpful and wasn't just go get legal advice. And then everyone I've spoken to in New Zealand, because part of my consideration is, well, is there going to be a little bit of no, you're not from here, like we don't like you. Everyone I've spoken to is like, no, what are you talking about? We're more than happy for Aussies to come over, and the more the merrier then. And so I'm interested in the New Zealand market. So I'd love to hear kind of your business. You predominantly do insurance, but you also do KiwiSaver and broad areas of advice. What's the kind of reason for that?
KiwiSaver is our superannuation scheme, I guess. So it's just called KiwiSaver.
Yeah.
It's not compulsory in New Zealand. It's an opt-in model, but a lot of people have been. It's just really good. But the problem is a lot of people didn't take any advice. They went into default funds and stuff like that. So they would join up when they got their first job with their employer and they started contributing, which was great, but they never took any advice. So we found there was a massive opportunity to do that, and we haven't been doing it very long. We sort of started and stopped and started, but it's just the amount of people we're able to help is great, and then the natural insurance conversation starts from there. So we considered going real deep into financial planning, but kind of love insurance.
Yeah.
So we want to be more insurance focused with a KiwiSaver angle, which is fine. But yeah, regulatory's been great. Like you said, the FMA, which is our body, they're always talking about they want more advice and they want advisors to be advising and stop creating roadblocks to advice is one of the messages they put out recently.
Yeah.
Which was interesting because, they want to see more Kiwis insured and taking advice because we do have a massively underinsured population.
Yeah.
And I think also we do have quite a low financial IQ in New Zealand. There's not a lot of, financial literacy taught.
Yeah.
But I do think that with KiwiSaver now over 10 years or 15 years old, I can't remember the exact dates, but it's more people are starting to understand investments and money and what it's doing for them and all that sort of stuff. So those questions are becoming more and more asked. So
yeah, and you said it's not compulsory, but if someone opts into it, does their employer put more money into it, like a co-pay kind of arrangement?
So the
or
minimum
something?
amount now is they've just changed it, but
Yeah,
the
there's a
minimum
minimum,
amount is
yeah.
3.5% from the employee,
Yeah.
and the contribution from the employer has to be 3.5%.
So I don't have to do it, but if I opt in and put some of my money in, then the employer then has to contribute.
Has to at the maximum and the minimum and the maximum amount. Sorry, they have to do is 3.5.
Yeah.
So it's 7% if you're
If you
taking
opt
the
in.
minimums.
Yeah, and so and it's kind of like free money for the employee.
If they
almost.
contribute a certain amount, the government then gives them a small top up of $260 a year or something.
Unlike our super system, which is, amazing, whereby the employer has to pay it. No if, buts or maybes, no way of getting around it. So it is a part of someone's remuneration, even if the employees don't, see the money there. And so, moving into a little bit more of the insurance. So the other thing that I think a lot of Aussies don't know about, you got ACC cover in New Zealand. So any Aussies, if you ever go to New Zealand and go for a skiing holiday and you injure yourself, then the New Zealand government will fund all our medical costs and replace our income. Is that right?
I don't know if they replace your income, but they will pay your medical costs when you're there.
They'll pay for medical costs. It is insane how good it is. But talk to me about...
I reckon Queenstown Hospital in winter is probably full of Australian tourists with broken collarbones and
I've
things
been
like
there,
that.
and my sister-in-law did an ACL there. So,
There you
and I was... You know what I was most annoyed about? She's never going to listen to this. So what I was annoyed about is I was there with my brother and we wanted to go skiing together. My family was back at home in Australia, so we were there to ski. His wife did her ACL like on the first run. The half the day he missed skiing, I was like, I kept on going down and going, Dave, you coming? What are we doing? And he's like, I've got to stay a bit longer because she's still here. And anyway, she went to hospital and then he kept on skiing. So we had an amazing rest of our ski holiday.
Just the first day was a bit of a down.
Yeah, exactly. But ACC, what does it stand for?
Good question.
Yeah.
It's Accident Corporation something.
So it's about accident cover.
Yeah, it's basically cover if you have an accident.
Yeah.
And includes no matter where you hurt yourself, if you have an accident at work or home or school, ACC will cover your medical costs, as well as if you're working, they'll cover up to 80% of your income until you go back to work full time.
That is insane. That is such a great social safety net. I hear that it's going to go broke soon because to me it sounds like it's very expensive social safety net for all accidents. But it does mean that some things, income protection. You guys have income protection over in New Zealand, I'm assuming. Yep. So how does that work? Are they not interested in income protection because they've got that accident cover?
There's probably a little bit of misunderstanding about what things are covered under what. So a lot of conversations you might have with people are, well, why do I need income protection when ACC covers me? And that's a good question. But, as we mentioned, ACC only covers accidents.
Yeah.
It doesn't cover you with an illness. So, 2/3 of people we know through statistics are off work due to illness and not an accident. So it's just about educating people, and income protection in New Zealand is offset by ACC. So if you are on an ACC claim, you can't also claim on income protection.
Yeah.
Generally.
Yeah, that makes sense. Yeah, and I guess no doubt the insurers bring out a whole bunch of statistics as to why 2/3 is actually for illnesses, so we need to cover that as well.
Exactly.
But I guess the question I have is, does it make income protection cheaper? But it's hard to kind of compare. You've got a smaller market, so your lives insured must be lower. But talk to me just broadly about your product suite that you have. So we have trauma or critical illness, income protection, life, and disability, TPD.
Yep.
What type of insurance policies can you recommend over in New Zealand?
We have all of those, plus a few moderate or severe trauma-based ones, so a bit more. Some of the trauma policies are very... there might be 40 or 50 conditions covered. Yeah. And it can be even one of the policy wording says it's like 1 millimetre skin cancer as a payout.
Yeah.
So they've
a full payout.
A full payout. Yeah, right. That's huge.
Yeah, that's massive.
But of course, the trauma cost is huge.
Yes. Yeah.
So there's a few companies that have introduced severity-based trauma policies. Yeah. So more that 1 millimetre wouldn't be covered, but a Clark 2 or 3 or different stage type cancer might be covered, so more severity based. We also have another income product called mortgage repayment insurance.
Yeah, okay.
So designed to pay the mortgage instead of just income protection. Most of the companies offer mortgage repayment cover with no offset against ACC. So we often look at that if someone's got a mortgage because, hey, you can have your ACC cover paid as well as mortgage repayment cover. And then we'd look at topping up income protection above the mortgage amounts.
Oh, okay. So, all right, let me just give you rough numbers just to get my head around it. Let's say that mortgage protection, you could get $4,000, but income protection, you can get $8,000.
Yep.
You would go $4,000 of mortgage and then $4,000 of income protection. So if you was an accident, you get your ACC and you still get your $4,000 for mortgage.
Yeah.
But you don't get that extra $4,000.
You wouldn't get income protection. Right. But if it was a medical problem,
then you get your full you get your income protection and your mortgage. Yeah. And this obvious, well, not obviously because I don't know the market, but do the same insurers, like you got like Fidelity, we don't have Fidelity here, but Fidelity will offer you that 4 mil of mortgage, 4 mil of income protection. Is that right?
Yep.
Yeah.
And everyone usually do it with the same company.
Yeah, everyone in the market will do that.
Yeah, they all have very similar product.
And is it similar underwriting for that mortgage protection cover? Yeah, okay.
Yeah, I mean it's It used to always be proof of a mortgage, and most of the companies will ask for proof of mortgage payments, which it's on a bank statement.
Yeah, it's easy.
But some of them offer percentage of mortgage repayment, so it could be up to 110 or 115% of mortgage repayments they would cover. Some will base it on a percentage of income, but it's lower than your maximum income protection rates. I think
Okay.
between 40 and 55% or something like that.
Yeah, and income. What does income protection cover?
Capped out at 75%.
Yeah, okay, yeah. And is there any, I guess we talk a lot about sustainability issues in Australia. We had massive regulatory changes with income protection because they were jostling over features and benefits and then just kind of letting their letting the sustainability kind of go to the sidewalk in Australia. And so the regulator came in and said, no guys, you got to dial back on some of these benefits and features. And so that was a huge change in Australia back in 2021. Is sustainability a concern in New Zealand with the insurers?
I think it's becoming a concern more and more.
Yeah.
Obviously, cost of living crisis is hitting us. I mean, we're just a little bit further away from the world, so everything costs a little bit more to get there. But we have as well, which is probably different and we didn't talk about, is medical insurance. So I, as an advisor, can recommend with a few different providers health insurance.
Yeah.
And it covers, things like hospitalisation operations, chemotherapy and drug treatments.
Yeah.
Sometimes specialists and tests and all that sort of stuff. We've had a real issue with our health insurers' costs and the premiums and just the claims costs and the medical inflation. It's made the premiums going up by up to 30% a year for a lot of medical insurances.
As an Aussie, I hear a 30% increase. Okay, that's adorable. We're seeing much bigger increases here.
Really?
Yeah,
Wow.
it's insane.
Yeah.
But the health side of their
So the
businesses
health
are
side's
starting
been
to
a
bleed.
massive problem.
Yeah.
And I think the insurers are probably losing a lot of customers because they're going, well, we do have universal healthcare in New Zealand, so if you do need an operation, you will get it through the public system. However, it's the waiting lists that are a problem, right? So health insurance alleviates that problem, but the cost of health insurance is now becoming a problem. We haven't seen the regulator or the government step in and go, sort it out, because I don't know if they have the power to do so.
Yeah.
Well, they probably do, but they
What
haven't.
What do you sort out? You just you just dial back on what they'll claim on, I guess, which is what they did here, is just make it harder to claim effectively.
But for the other products like your traumas and incomes and all that sort of stuff, there's been no.
Yeah.
I mean, yes, prices are going up across the board. And as we all know, most insurances go up every year for yearly renewable term policies. So.
The other hot topic in Australia is mental health claims. That's becoming a massive thing. Every time I read any articles about mental health claims and how much that's having a really unsustainable impact on insurance. Is that something that's in New Zealand as well?
Yeah, I mean, we see so much when we're talking to our clients, mental health now. And some insurers are loading premiums for it. I know you guys had a major issue with TPD on the mental health side.
Yeah.
We haven't seen that in New Zealand, but I do think that TPD is quite undersold in New Zealand, or under-advised, should I say. And it is claimable on income protection insurance, and I personally know people that are actually on claim at the moment for it.
Yeah.
And it is a real hard one for the insurance companies to, obviously they want to help pay claims, but they also want to get people off claims as quick as they can. So it hasn't been a problem yet, but I do see the future.
And I
becoming a problem, maybe.
Yeah, I'm just thinking about our system because we've got so much default cover through our superannuation that talking to some insurers, going to some board meetings with the insurers and their actuaries, and they're saying that that's actually where their biggest cost is the default cover, because there's no inbuilt exclusions or issues in the default cover, and it's so easy to go and claim. So easy. Obviously, it's legitimate claims are going to be legitimate, but the insurers are feeling like, historically, we would have happily declined this and it been an actual decline and reasonable, but now they're getting medical sign-off as well as like lawyers coming after that area. So that's where the sustainability is becoming a big issue. Is this? We've got so much default cover in our super system where it's $150,000, you can claim on it and get paid out. So some of the big group funds are just hemorrhaging cash in that space, but you guys don't have that within your KiwiSaver. You don't have the default. Everyone's underwritten. Is every policy underwritten, or do you have like group schemes?
Yeah,
like
unless
within
you're on a
employer?
group scheme.
Yeah.
So if you're a part of a company that's got a group
Is that a big business in New Zealand, the group space?
It's getting bigger.
Yeah.
Employee benefits are becoming a real perk, I guess. More so historically medical insurance group benefits.
Yes.
So you don't see obviously TPD claims on that, but more and more now we're talking to employers about, income protection, life insurance and also TPD, disability insurance. So that could be interesting in the future if, we advisors start giving more non-underwritten TPD out there and things like this happen. Could be a problem.
Yeah.
I
guess it's just priced. I mean, are the group schemes, do you do any group schemes?
We've got a few.
Yeah.
We don't have a lot of them.
Are they priced much higher than an individual policy, underwritten policy?
A heck of a lot.
Yeah, okay.
Pretty competitive, really.
Yeah. Yeah, so it's not that big. I mean, we don't work in the group space. And there are plenty of group schemes out there, but I feel like I feel like it's come off. It's not that big in Australia. And the group health covers as well, I feel like that's less popular than what it used to be, unless you're an American tech company. They've all got them because they have them in America, so they've got to bring them over here. And so, I guess I wanted to talk a little bit more about kind of the advice business, your advice business. What's the future look like for you?
Good question.
Open up that crystal ball and tell me where the business is going.
Yeah, we're constantly playing with that one. Our business is an interesting one because it's 5 years old, it's still kind of new. It was just me for the first sort of 3 years and 3.5 years, and then my partner joined me last September. So we're in a bit of a growth phase now. So we want to build a team. We used to have quite a large team at our last business. While we don't want a huge team anymore, we want a good number of advisors because we're a lot of what we're doing at the moment is we're building process and systems. So we're just about finished.
You're never finished. You're never finished.
No, we've talked about this a lot today. Yeah. We're building our own custom CRM and advice tool. So I'd say it's 85% there. So don't get me back in a year and I'll be like, it's 87% there probably.
Exactly.
But we're getting there with that, which is really cool. It's just going to make us be able to give more advice to more people quicker. At the moment, our systems are a little bit clunky. And while they're good and they're compliant and they tick the box and the client gets advice, there's only so many hours in a week we can deal with people, and we want to be able to do more for more people. So a lot of what we're doing at the moment is about how to get that onboarded quickly, and then the next thing is sort of opening up a bit more of our marketing. So doing things like this, we're building our own process. We've got a junior advisor, Lockie, who's just sort of started, and he's real keen to set up a podcast, sort of giving some free advice or free information to the people of New Zealand and how we can sort of share some tips and ideas with them, and then just doing more content creation ourselves. We had some company doing content creation for us before, and it was the generic picture of a happy family walking on the beach saying you need some life insurance, and I was just every month they'd send me through the stuff and I'm like, I hate this, but I don't know what to do. And
it's easy to give your approval and to
so I'd just say
kick
yes
up a stink,
pay the money, and the same 4 people liked every post, and they'd send a report through, and I'm like, this is just terrible. So we actually found someone who does a lot of content creation for businesses, and they're really into the storytelling side of it. So we're just starting. It's really new. We've got her sort of follows us around with a camera here and there, and we'll be in a cafe, next minute she's taking photos of us. It's like, what are you doing here? It's like a sniper. She shows up.
How good.
And then, so we're just sort of trying to put a bit of a human element around the business. So, while we're a brand and all that sort of stuff, you're dealing with the people. I still, believe it's a people business.
Yeah.
And sort of getting to know the people behind the business and all that sort of stuff. So
love it. So you'll be New Zealand's next influencer, I'm hearing.
I don't like being on the camera. So I'm like, I was saying to them, it's not all about me. It's like, get Lockie on. He's young and pretty. I'm not.
Yeah,
I've got to face the radio.
You've got to keep remembering it's about helping other people.
Exactly.
And you got to get over yourself. But all right, I do have a question. Actually, you said you're going to build a custom CRM. Mm-hmm. All I hear is millions of dollars, because I've been in advice, you've been in advice for a while. You've no doubt seen heaps of people do that in the past and lost a whole bunch of money. But now we live in the world of AI, I think it's still going to cost a lot of money, but we're doing some custom software stuff ourselves in our business, and it's nowhere near as expensive as it used to be. No. So talk to me, how are you guys thinking about it?
But 3 years ago, if you had asked me if I was building a CRM, no way, like big capital, no way. It was just, you $500,000 at least probably gone. And I know of a company that spent probably $2 million building a custom CRM and advice process, and the person who's actually building ours had to go in and fix it. So they spent a lot of money for something that didn't work. But yeah, the people we've partnered with, it's actually a client of mine, a really good dude. He builds these systems. He uses a lot of AI in the background to solve problems and to rewrite things that aren't quite there. I spent an hour on I'm terrible because he has this thing where he wants you to put up a chat bot every time you have a problem, but I just go, no, I'm doing it this way. So I film my screen on a Teams call, I record it, and I just talk through everything, and I go, okay, I'm pretending I'm doing advice, and I'm putting in the case, the case study that I'm doing, and I'll go, oh, this needs to do this and say that and do this and please put this over here. And I think I sent through 85 lines of change the other day, and the next morning it was done. I got an email back from his system, from his AI agent that works in the background, saying it was all done. I went and had a look, and it was. Yeah. So, yeah, the cost is totally like nowhere near. Yeah. It's small percentages of what it could be.
A fraction of a percent of what it used to be. Yeah.
Like we talk about $2 million.
Yeah.
Yeah.
I mean, same with us. That's been our experience. Now, you need someone who knows what they're doing, which is what we're doing in our business. Like, I think in a few years' time we could do it if we had the time, capacity, energy. But these days, if you have someone who's capable, who kind of understands it, a little bit AI native, then you can go, let's start solving problems. And how do we solve these problems? So I'm not at the stage where I'm going to fully replace our CRM in our business, but we are replacing tools and functionality in our business and going to try and keep on gobbling it up. And the way I think about it is I don't use AI to run the tools. We use AI to build the tools, and then we want dumb things to run the tools, because AI and data privacy and all of this stuff still freaks me out. I don't like, if Amazon can't feel comfortable with Anthropic with their data, then I'm not going to feel like I'm much stupider than any of those guys. So I'm not going to know what's going on. So we always go, all right, let's use the tools to use AI to build, but then keep it dumb.
Yeah.
And so
we still have to, with this, it's manual inputting. I have to do it, or the client has to do it, or someone has to do it. Yeah. And he stores it all on Amazon and stuff like that. So pretty confident.
Now, one thing, I did ask you a little bit about the products, but the one thing most Aussies that are the most interested about your products is your commissions. Tell me about your commission rates. And anyone who doesn't know anything about the Aussie commission rate, just sit down, take a seat, because you might fall over. What does it look like?
No, I'm going to get a job at passport control, because I might get a few coming through the door. You can get paid anywhere between about 60% of first year premium and up to 230% of first year premium.
Who's paying 60? Who would be?
Oh, it's like a medical policy.
Right. Oh, so those healthcare. Yeah, the healthcare, do they not pay the same rate as the life? No. Yeah, I would have thought so.
And it's only some life, like lump sum life risk products that pay.
The big ones.
Up to 230, I think is the maximum.
Income protection?
Less.
Yeah.
I'm not a big one on how much the commission rates are. I've never been like that fascinated by them. I know roughly what they are, and it's not bad.
Yeah, I find it's
pretty good.
I find it's not bad. Don't say that in Australia. You'll get. The reason why you need to get to the airport soon is because you have people with pitchforks coming after you saying it's not bad, 200%. And this is the thing that is really fascinating, is that, there's this argument, there was in Australia, the argument, the high commission rates increases high churn rates. And so what are your thoughts on that? Obviously, you're not going to advocate for lower commission rates, but do you feel like it has had an impact or influence on moving policies, or do you think that's the right thing for the clients to move policies?
I can only speak for myself. It doesn't affect how I operate and me as an advisor. Yeah. It's just what the market pays. I don't ever look at the different companies and go, oh, they pay more commission, I'll put it there. I'm very focused on doing the right thing by the client and putting them in the best spot. Return, it doesn't factor into conversations we have in our business. It may in other advisors' business. I don't know. Yeah,
but your insurers are happy with the commission rate. That's the other thing. Everyone I've spoken to they're like, we think it's better because we get the business. Like, we're not getting business if we don't pay this. and it's
I'm
affordable
sure
and
their
sustainable.
shareholders might like to pay less commission.
Oh,
but
everyone would love to. If nothing else changed, paying less upfront is better. But
Yeah.
the issue is that other things change, and that's the thing that we didn't have the foresight in Australia. Is other things change. It meant $1 billion of new premiums to $300 million of new premiums, and then every insurance company in Australia is like, we would love to pay that because we've tried to go direct, and it costs us 200+% in initial premiums just to bring on a client that we're paying you guys 66%. So like advisors are always the best way because it's cheapest for insurers in Australia. So one thing I did find interesting when I did a little bit of due diligence, you also have like acceptance rates and like completion rates and all of these things, or some insurers have these other metrics to have a higher commission rate. Is that correct? Is that still a thing?
It's gone now.
Oh, so it's just flat commission, no...
Yeah, there's no performance element to it. So there was some that were... historically there was persistency based.
I like that though.
Yeah, but I think they had a change in the government along, incentivisation of those sort of things, and basically it turned around that they couldn't pay commission based on
any of
those metrics apart from
just premiums.
Yeah, the client had been accepted or not.
That's so interesting because when I looked at it, I mean, there was like I looked at Fidelity's. Don't know if they're a big insurer. I think they're top 3. Are they Fidelity or top 5? I don't know. They're big enough.
There's only 6,
sure.
so yeah, they're probably top 5.
Yeah, there's only 6.
They're definitely in the top 5.
Yeah, they're definitely in the top 15 of the 6 insurers.
Yeah.
And one thing, it did have like how many apps you complete a year. Yeah, sure, I probably don't love that. But it did have like acceptance rates, and it did have like churn rate within your book. I think that's actually super positive because if there's an advisor out there submitting 50% of policies and they're not getting accepted, they're wasting money on the insurer, and my clients are paying that because we're plus 90% completion rates. So I should be actually better off. Now, I'm happy in Australia. I couldn't care less if the client gets the benefit, but I don't want the client to get the downside of peanut down the road giving a 50% acceptance rate. But then also churn rate as well, like, incentivizing holding a policy there. I actually like, if that was the whole reason Australia reduced commission rate is churn, quote unquote churn, well then let's have a persistency rate within the book. And if you don't, then your commission rate drops.
Yeah.
I actually found that really interesting. It, from a disclosure point of view, would have been a nightmare because your disclosures...
We disclose what we earn.
Moving target though.
Yeah, I mean now it gets specific when we provide the advice, right? So we have to be, in our initial disclosure is generic that we can earn between X and X.
Yes.
But then if we are recommending, Fidelity for instance, and we know what their rates are, we would then say, we would earn this commission based off your application being accepted.
Yeah, but then if that was a like persistency rates and stuff brought down, like all of that would have been really hard to kind of go, well...
It'd just be a lot of work for our compliance person to be writing that every time we write a statement of advice. Yeah, to make you 230% earned. Not paying staff.
Yeah.
But as a managing agent, in the past we had 18 advisors. It was great to see those results and all that sort of stuff. And we'd have those conversations with the insurers a lot because... when you bring some new people on, it might be that they are submitting some cases that aren't the best and they're not sticking. It's like, well, why not? So we can see the problem quicker and then try and manage it through training and whatnot. Persistency ones were interesting. We'd have those conversations, and if people were moving business around, we'd you like to be on top of it. We still can see persistency reports.
But everyone's less focused. If you're not focusing on it, you're not going to measure it, and you're not going to do anything about it, which is just normal business.
But it's not. I mean, if your persistency dropped a lot at a company for whatever reason, they're not going to penalise you for it now.
Yeah.
They could shut your agency down, of course.
Yes,
but that would be pretty extreme.
It's just that. Yeah, I don't think that
you'd have to be doing some pretty.
Rarely happens in Australia.
You'd have to be doing some very bad stuff. I think
rarely happens in Australia. Yeah. They will tisk on the way out and then roll out the red carpet on the way in.
Exactly.
So, but that's across all borders with all insurance.
Yeah, and we do have a responsibility period on that new business income.
Oh yeah, what's that?
It's 2 years generally. So, if they do cancel or whatever in the first 2 years, then you do have to pay a percentage of it back.
Well, the good thing about it is in Australia they dropped our commission rate and increased that so we've got 2 years as well, but that came after a decrease of commission rate.
Yeah.
So
Yeah, maybe ours should be longer.
are you sure you don't want to come over and move to Australia?
I don't know. Maybe I could swap with someone, do a role swap.
Actually, I do have a little bit niche question just for my own reference in terms of tax benefits. Is there any of the policies that you pay over there, is it all after tax dollars, or do you get any tax kind of benefits or features or anything? It's
There's
all
literally no tax rebates for taking any insurance out of New Zealand.
Yeah, okay.
Which is something that's been discussed, but it's at a very minute level of government at the moment.
Yeah.
We're talking about the health insurance premiums rising. Maybe if there was some tax deductions, then it would make it more palatable, I guess. But at the moment, there's no tax. Well, you can deduct premiums if you're self-employed.
Yes,
on certain products, but
the individual can't.
But the individual,
they get nothing.
Mum and dad who've got a life insurance policy, if it's $1,000 a year, they pay $1,000. There's no deduction.
Yeah. I mean, that's again talking about the pros and cons. As much as Australians, we love to whinge about our commission rate and how our regulation and all this moaning and complaining. We do income protection tax deductible. We get to pay the premiums from or a lot of the premiums from superannuation. They're massive free kicks that we get here in Australia. That we work with really young clients, and just having that a capacity and the ability to pay it through their super fund is really helpful for people who are young families, cash flow poor, but have an asset base that they know they can catch up on in the future. Is like super important for our business. And I definitely feel like it would be much harder in New Zealand saying, hey, you pay income tax and then you pay these premiums and none of it can come out of KiwiSaver and good luck. Do you, again, on the fly, you may not have the number, but do you have a rough idea of what your average premium rate for a client would be? Like just off the top of your head?
We've just gone through a little bit of a process of this, and I think it's our average premium is about $4,500 per year.
Okay.
Of our client base.
And what's your typical client? Are you like mid 40s, 50s, or you?
Yeah, we're probably a little bit 40 and above.
Yeah, okay.
Because my business partner's a little bit older, so that old sort of thing of your clients are sort of 10 years either side of you.
Yeah.
So he's got a few older clients, but they start de-risking and start not needing as much insurance. So
exactly.
The cases sort of drop down. But yeah, our clients between 40 and 60 averagely. Yeah. But we've got these newish advisors coming in who are a bit younger, like Lockie's 27 or 28 years old. So, already sort of starting to see some more younger people coming through.
Yeah.
And the other interesting part is that some of my existing clients who, coming up 20 years, their kids are now getting to the point without needing insurance. So you're sort of getting that second generation of like, here's my 20-year-old kid who's just got his first job and he needs some insurance. You're like, wow, it's not a lot of premium compared to what your parents are paying. Yeah. So it's interesting.
Yeah. Well, welcome to my life. We've got low premium clients, but hey, we're passionate about helping everyday Australians.
The main thing is making sure they're insured, right?
Yeah, exactly. Hey, Matt, really appreciate you coming in and letting me shove a camera in your face and a microphone in front of your mouth and sharing everything. If someone wanted to reach out and connect with you, what's the best way to do that?
Our website's www.sproutfs.co.nz, or just you'll find my contact details on there probably, or I'm on LinkedIn. Post on there quite a bit.
Awesome.
I'm a pest on there.
Perfect.
Exactly.
Awesome. Thanks, Matt. Appreciate it.
Thanks, mate.